Hello, everyone. We're joined today by Steve Mize, who is a co-founder and principal of G Value in Florida. And Steve, along with his brother Darren, have built a tremendous valuation company, GCF Valuation. They support banks across the country and individuals. They've done thousands and thousands of valuations. And Steve, welcome today.
I appreciate it, Dominic. Thanks for having me.
You know, we just talked a couple of weeks ago on a podcast, and who thought we'd be back on the phone again so soon in the middle of this COVID crisis to talk about what people do now that they're faced with uncertainty.
Yeah, it's trying times. We've been fielding a lot of phone calls and answering a lot of questions, and there just seems to be a lot of uncertainty out there. So I'm happy to help answer any questions.
But we've both been there. We lived through the 2008 meltdown. You've lived through it. You've seen a lot. At a high level, I want to get down and talk about buyers and sellers individually and what they should do. But at a high level, what are your takeaways from the previous crisis? You know, how can we apply that thinking to this, and where shouldn't we apply that thinking to what's going on right now?
Yeah, we've been through two crises in our lifetime, from our business lifetime. The first one was early on, was 9/11. We started our firm in 1997, and by the time 9/11 came around, we were right in the middle of M&A, right in the middle of doing valuations for acquisitions and lenders, brokers, buyers, sellers, and lenders. And it's very similar to the recession of in 2008, 2009 as well. It's just a lot of uncertainty. So we tend to see people not making any major decisions under uncertain times. So I see that's the biggest take from this. Is it's very similar. As deals come through, we're really seeing a lot of buyers sitting on the sidelines and say, you know what, let's give it 30 days, let's give it 60 days. And it's very similar to the two other crises that we.
So let's talk about that. Let's dive in, and maybe we'll talk about buyers first. Our firm, our M&A practice, Sun Acquisitions, we, prior to the COVID crisis, had 8 deals in diligence. We still have 8 deals in diligence. 2 have hit the pause button, but they're not dead. And we're trying to make our way through to see what's next. And by the way, that's a changing thing every day. I mean, we're having conversations every day in all of our deals. Yesterday was slightly different. So it's a moving target. But from a buyer's perspective, what should a buyer be thinking about in this crisis? And I'm sure it's not pull back and do nothing, but it's also not, move forward blindly, which I'm sure nobody's doing.
Sure.
But what's your advice there?
I think a buyer needs to do a fair amount of due diligence just within the COVID crisis. So we need to be looking at our loss of customers, breakdown of supply chains, if it's a distribution, manufacturing type business. This is going to be very industry specific. So I truly think that every buyer really needs to do their own due diligence on that business for this specific crisis.
Yeah, we're seeing that. We've got some deals where the business is doing very well, some cases better than before the crisis.
Yeah, I'm working.
We have some other deals that are not.
Yeah, exactly. I'm working on a few different valuations right now. One, a group of 30 restaurants. Obviously, depending upon where those restaurants are, there's been a lot of closures.
Yeah.
How is that going to impact it? Short term is what we're trying to figure out now. And that's relatively easy. That's a liquidity aspect to it. But long term, what's the long term effect going to be? That's where valuation gets tricky. Then we're looking at professional practices, CPAs, doctors' practice. Those are going to be a little bit different. We're probably not going to see a ton of impact to those types of businesses. So you're right. It really depends upon the industry itself. Some are going to actually flourish, and quite a bit are going to take a hit.
So if a buyer's in the middle of a deal, let's get a little specific here. So buyer's in the middle of a deal, they've got a business under contract in an LOI. What do they do? What's your best advice from a valuation perspective if it's not completely clear what's going to happen in the next 6 months to a year?
Uh, I would say at first, from what I'm seeing, from the willing buyers that I'm seeing in the marketplace right now, I see that they're doing quite a bit of due diligence. They're asking a lot of questions. I am not seeing a whole lot of people closing right now. I do think people are going to wait a couple of weeks to see where this leads. I would only hope that any buyer would keep the deal on the table, but ask questions, figure out how this crisis has hurt or helped that specific business, and then keep everybody in the loop. If it's a leverage buyout, keep the bank in the loop. Don't drop the ball and simply fall off the face of the earth. Keep all the players, the attorneys, the CPAs, the brokers, the banks, the appraisers, keep everybody in the loop, and let's kind of work through this process together.
And I'm assuming the place that you're coming at from, and it's where I come from, based on the 2008 crisis, is these businesses will come out the other side if they're a good, solid business with good fundamentals. And the questions are the specific ones that you're mentioning. Do they have where's their supply chain? Do they have a good client base? And so you need to understand all those things and be thoughtful. There are some businesses that aren't going to make it out the other side, but to just abandon a deal without the proper information doesn't make a lot of sense.
Yeah. Although this is uncertain times, and I think there will be a lot of closures that for smaller Main Street type businesses that just don't have the liquidity to last more than 30, 60, 90 days. We see a lot of balance sheets. We see a ton of balance sheets, and the smaller businesses, the Main Street type businesses that really don't have that cushion, that buffer, are going to take a hit. But the strong companies with strong balance sheets and good liquidity are going to make it through the other side, and most likely stronger. The economy is still strong. This is a good economy. Prior to this, this crisis, this was a good economy to be a buyer and seller in, and I unlike the what I would call the Great Recession, 2008, 2009. I think there's going to be quite a bit of push once everyone gets back in business. I'm not going to say things are going to be back to normal. I think there's definitely going to be a new normal, but I don't think it's going to be as bad as what we saw in 2008, 2009, and 2010.
Okay. So, Steve, let's move over to the other side. Business owners who were thinking about selling, want to sell. What should they be thinking about right now?
Oh man. In our last podcast, we kind of talked about the primary functions of cleaning up your books, showing as much cash flow as possible, reducing reliance upon main customers, reducing reliance upon the owner themselves. That's more of a long-term goal when you're looking at increasing value. Right now, it's simply surviving and making sure that your employees are up to date on what's going on, keeping in touch with your supply chain and your customers for the most part. So, right now, I truly think it's going to be about communication with everyone in your within your group, your suppliers, your customers, your employees, especially your customers, letting them know, hey, we're open for business, and we're doing everything we can to get through this crisis, and hopefully we can do it together.
So, Steve, one of the questions that we're getting from sellers, and I'm really interested to hear your reaction to this, is, how are the banks, how are the valuation companies going to view my business if I have this dip over the next 3, 4, 5, 6 months, but I come out the other side and I come back to some level of normalcy? will they look at my history and value my business based on the history? Am I going to take a hit because of what's happened here in the short term? What's your answer to that?
There's two ways to look at value and how the COVID crisis is going to impact it. One is going to be what's happening right now. So if I'm going to value a business, let's say that there's a buyer and seller currently right now, and they're going to close next month. There is going to be an impact on value. And what we're trying to do is figure out how long is it going to take to get back to what we would say normalcy. Let's say that average cash flow is $1 million. And we know that there's going to be a hit over the next 2, 3, 4, 5 months. We've got to figure out what is that going to be, that lack of liquidity, or how much liquidity are we going to need to be able to get back to normalcy. That working capital shortfall, in my opinion, is your value deficit. That's one way to look at it. Two things is, let's say we're 6 months down the road or a year down the road, and the bank does see that blip. There's a 6 months or 1 year, we'll call it 1 year. 2020 was not a great year. What we tend to do at that point is look at an 18 to a 24 month-to-month P&L. If we see that there is an actual drop during the COVID crisis and then return to normalcy, we call that an outlier. At that point, we're going to eliminate that outlier and smooth that out using a projection for the next forward-looking 12 months that really doesn't take that into consideration. Obviously, there's going to be some risk put on the discount rate or cap rate, depending upon the type of methodology that we're going to use. That's going to take that in consideration because, if you're not immune to whether it's a cyclical industry or some type of a crisis like this, there is some risk. But let's say on the other side, if you weren't hurt at all, and at that point, you're going to get marks, you're going to get lower risk and most likely a higher value than you did 6 months to a year back, because you've just showed everybody that you went through the crisis, came out on the other end even stronger. And it didn't impact you like it did your competitors.
Well, there's a ray of hope in the middle of a crisis.
Exactly.
You've got a business that recovers and gets back to some normalcy or gets through this okay, your valuation is probably going to stay pretty much intact.
Yeah, but there is quite a bit of uncertainty at this point. We're hoping, obviously, over the next few weeks that we'll get some good answers. As the president mentioned, we'd love to see everyone back up and running at full speed, close to Easter or soon after. But until then, communicate with your customers, your suppliers, especially your employees, and we can all kind of work through this together.
All right, Steve. Well, listen, I appreciate you taking a few minutes out of your day to come and chat with us and give everybody an update. And it sounds like maybe we should check back in a couple of weeks or a month and see how this is all shaken out.
Sounds good. Yeah, I'd love to be back. And if there's any questions, feel free to give me a holler.
Stay safe and healthy. To our community, once again, we're trying to put out videos that can be helpful to business owners and buyers during this crisis. If you or someone you know has information or resources that you think can be helpful to a business owner or buyer, please reach out to me. We'd love to get that content out to everybody and distributed. You can reach me at drinaldi@sunacquisitions.com. Stay safe and healthy. Thank you.